I've gained 2 years experience since my last backtesting video, and my methods have changed a little bit. Although I'm still using the same strategy, it's changed almost completely, and my trade journal has become a lot more refined. I know some people have started using software like Forex Tester, but I'm still using TradingView because that's what's most congruent with the way that I trade live. So to backtest your strategy, you need 2 things. You need the cheapest TradingView subscription and a trade journal. I use Notion for mine. It's really simple. I'll put it on screen now. I'm not going to sell the template or anything because honestly you can make this yourself really easily. We'll talk about it properly later in the video. So I often get people asking me whether I take this trade or that trade, especially in my consulting calls. So I thought it would be worthwhile for me to publish my backtesting data and all of my notes online. So I've put my 2021 backtesting data and 2022 backtesting data on Gumroad along with my trade plan. So that way when you guys are backtesting, you can compare your trades directly against mine. I know this isn't something that everybody needs, but I know some people will find it really helpful. Oh, and I'll also add my 2023 backtesting data later this year. So let's get started. Before we actually start backtesting, I think it's worthwhile giving you guys a few tips that I would consider essential. So you want to make sure that you've got a favorite toolbar set up. So for example, I've got my long position, short position, the brush tool, trend lines, and rectangles, things like this. These are all quite important things that you might want when you're trying to draw liquidity areas. Maybe you want to draw ascending channels. These are all crucial things that I think most people will need regardless of your strategy. You can add Fibonacci tool, whatever on there. So the second tip I want to give you guys is setting templates for everything. It's honestly painful how often I see people not using templates. I see people getting the risk reward tool like this for a trade and then manually trying to get 12 pips, and I don't know why it's so time consuming. Like, you can just double click on it and make a template here. So I can put in 120, 120, and then you can save as and then call it 12. I've got one already. And then next time you put a risk reward tool down, you can click on the templates button, click on 12, and boom, you got 12 pip stop loss. So much easier. And you can set templates for everything. You can set a template for the color theme. For example, I've got a dark inverted color theme because sometimes it's easier to see buys and sells. I've got a light color theme. Set up templates for as many things as you can. So the third tip I've got is to turn on the weak magnet. Now, I don't think this quite fits on my recording. Basically, it just means that when you're using the trend lines or the brush tool, it will automatically lock onto highs, lows, opens, and closes of candles. It just makes it a lot easier to draw trend lines from candle to candle, more precise. And then you can quite easily turn this off by holding control. So it will stop locking on if you hold control, which is quite important for when you want to do drawings without it locking onto all the tops of the candles. So the fourth tip I've got is to keep all of your assets arranged in the object tree. So this doesn't quite fit on my screen recording again, so I'll add this in later. But basically, you want to make sure that you've got all of your trades hidden and in folders. So for example, let's say I took a trade right here for whatever reason, and I used a 9 pip stop loss, which is what I actually use now rather than 12. I'd hide this and name it flag, and I'd put it in a folder called October 2023. So you want to make sure that you've done that for all your trades, because otherwise you won't even be able to see the prices along the right. I know there's some people who just have trades upon trades like this all down the right and you can't see the prices. I don't know why people do that, but yeah, keep everything organized in the object list and your trading view will lag a lot less as well. All right, so let's actually start backtesting now. So I've got AUD USD up, which is one of my favorite pairs, and I'm going to go back to, I think, January, because January is generally a really good month for all of my pairs with my trading strategy. I'll go to 2022. So you can either hit this calendar icon in the bottom left, but a handy shortcut I'll give you is Alt-G, and that brings it up automatically. So we'll go back to January of 2021 like this. Okay, so with the cheapest TradingView subscription, which is the only one you need really, you have a limit of 10,000 candles. So as you can see right here, we've reached our limit. If you want to get the rest of the candles, you'll have to use the bar replay tool. So I'll hide the other 10,000 candles and get another 10,000 candles. So I hope that makes sense. So I was able to go back. So the way you actually want to backtest is you want to go really slowly, and I'm going to do my best to do that in this video. Admittedly, I do go a bit quick sometimes, so make sure you hold me accountable. You want to go candle by candle, and you really want to focus on how price is reacting in certain areas and what it means when certain patterns form. Like for example, I can see 3 large wicks to the upside here, which is telling me maybe price wants to move down. So if I just speed that along, there you go. You know, things like that. Those are the kind of characteristics that you'll only learn from going slowly. If you're going quick, speeding through the candles, you'll never pick up any details like that. It's basically like what I spoke about in my naked charting video, so you can kind of backtest a naked chart at the same time. So yeah, I'm going to do my best to go slowly in this video. Okay, so now we're just going to be looking out for trades. At this point, we can see a nice impulse. It is a Monday, so I am a little bit more cautious earlier in the week. At this point, I would look for a flag if this pattern formed, or a continuation if this pattern formed. So let's see what happens. Ideally, I don't want to see a shift here, especially on a Monday. We are starting to move up, but there's still no shift. Okay, we broke the low in this case, so I'm not looking for anything. There's no valid setup for me anymore. We're likely to range considering it's earlier in the week. Breaking and retracing. I am going a little bit fast. I think if it's one of your first times backtesting, you should go a little bit slower than I am right now. Okay, right here I'm seeing a shift to the upside. This could signify the start of a trend. Yeah, right. At this point, starting to see a trend, I'd consider a continuation pattern, which again is either a flag or a small pullback here and then a continuation. Those are the patterns I trade. Oh, never mind. I thought we were seeing a shift there, but we've got a nice wick in our favor. Keep on going through, see if we get a flag. All right, we broke the flag low. Now I'm looking for the entry candle. This was just after spread hours. That's okay. There we go. So we're going to get our first trade in the journal. So right here, use my template, 9 pip stop loss. Let's go. What's it going to be? It's a loss. So the way that I personally track my losses is I'll do this. That way I can see at a glance this was a 1% loss or a reduced risk loss. So what I'll do now is I'll try and kind of place it quite nicely, and I'll hit Control, Alt, and S. In the top right corner, there is like a camera icon, and you can click this and you can get a link, or you can copy the image, but I tend to download the image so I can put it directly in my trade journal. Okay, so I got up my Notion. This is my trade journal. I've basically duplicated my template here to make a new empty journal, which we're going to use in this video for AUD/USD. In my journal, we're considering things like the pair, of course, the position, whether it's a buy or sell. We'll fill these out as we go along. So this is on AUD/USD, it's a buy, it's a 9 pip stop loss, and then the MAE, that's the maximum adverse excursion. This is a metric which I've been tracking personally because I find it really interesting and really helpful. So this is the furthest a trade pulls back before going into profit. So in this case, it didn't go into profit at all, it just pulled straight back. So the max adverse excursion was 9. So this trade was on the 4th of January at 11 o'clock. The date is really important to get right because you might be referencing this in the future. It wasn't a scale in, it was a flag, and it was a 1% loss. And then what I'll do is I'll add the image. There we go, that's uploading, and I'll write down any notes at the time. And this is really handy when you're looking back because you might not take this trade again in the future. After doing your first or second run of backtesting, you might look back at this trade and think, actually, I don't like that anymore. And you can look at the reasons that you justified that trade at the time. So I'm going to say it's an impulse coming from a range. Monday, is it? Wednesday morning. Early Wednesday morning. No shift in flag formation. I'm talking about a shift in momentum. There was no shift to the downside. Momentum was always to the upside within this flag. We could see that by favorable wicks. I was able to reduce risk on the entry candle. There we go. And I think that is all my notes for this trade. Yeah, so we'll go back to TradingView now. Okay, so now we're back in TradingView, and what I do is I would put this in a folder. So I would lock this, put it in a folder, name it flag, and I'd put the name of the folder January of 2022. So that's how I would do that. So I'll lock and hide that and put it in a folder. So we'll continue. Let's see what happens. We'll probably just range after that kind of took us out. Okay, we broke the high. We're not really seeing momentum though, we're kind of ascending. And that's generally what you see happen from an ascending. We're seeing a huge shift to the downside. So from here, I would look for continuations patterns if we continue moving down. Okay, momentum's gone. It's completely gone. Momentum is still overall to the downside, but you can see how it's slowed down like that. Those 3 candles, where has the momentum gone? This was a news candle, I suppose, because it just didn't continue. We're starting to see it pick up again. That's very nice. Looking for a trade here, and never mind, we got a shift. So after this candle, momentum is to the upside for me. Even though we have this big trend here, now momentum is to the upside, and if we do break into this area, we're probably going to fail because of all the buyers that just entered the market. Ranging around, that's to be expected. Coming up to Friday now, so people can sell off their positions on a Friday, so all these sellers might close and we'll start moving up. That's a potential. I think this was NFP candle. So I wouldn't be surprised if we start moving up from here a little bit as these sellers close off their position. I guess kind of. You can kind of see that happening. It's something I've been looking into recently. Alright, into Monday of the second week now. Let's see if we can get any more trades. NFP week is generally quite range bound, but this looked like it was quite a trending one, which is nice. Right, kind of a messy ascending here. I probably wouldn't look to take anything down here early on a Monday. I am cautious earlier in the week. Alright, broken above this range. I'll use my rectangle to join a liquidity area. Let's see how price reacts in this area. There's no shift. Will we continue? Okay, bit more ascending, kind of breaking and retracing highs now. Alright, yeah. So we ascended in a liquidity area. If we see momentum down, I would like to see a continuation. And that is not what we expected. Big impulse to the upside. So that's absolutely fine. This is why I'm a trend trader. I generally am waiting for a confirmation before entering a trade. So I'm not entering in advance, if that makes sense. So looking at this now, of course my bias is for longs. I'm a trend trader, so I'm looking for buys. Let's see what happens. We might get a continuation. This would be really nice. That inside bar is really good. So even if we get a smaller break, I'd be willing to take that. That is very small. I think I'd probably take that on a Wednesday as well. Yeah, okay. So for continuations, I set my order 1 pip above when it's a single candle break, or 2 pips above when it's a 2 candle break. So in this case, set 727.90. So I want it to be at 800. And that is 1 pip above, 9 pip stop loss. Let's see if we get tagged in. We should. Yeah, there's a tiny break, so I'm not surprised. Okay, there's a counter trend candle here, and then we broke the high, which means I should be able to lock in some profit. So the way I do this is I put it 2 pips below. I'm a bit OCD about the way that I mark my stop losses. I do it exactly 5 bars in width every time. Just the way I like it. Okay. So this is handy now. I can show you guys how to calculate a reduced risk loss. So there's a few different ways you can do this. So it's still a loss, so I'm hiding the profit tool, the profit part of the risk reward tool. So you kind of want to calculate the distance from your entry. So my entry is at 800 to where the stop loss is. So it was, I think, 2 pips below here. So negative 1.9. I know it's negative 3.9. So my stop loss was 3.9 pips. And I know the total is 9 pips. So basically you want to divide 3.9 by 9. And I know that I was taken out for negative 0.43%. So that's how I track that. So I'll do the same thing. I'll get a nice layout. I'll take a screenshot, Control Alt S, and we'll go into my Notion. Okay, so back in Notion now. One thing I realized I didn't tell you guys was about how I got it to automatically preload my this template. So the way you want to do that is you want to make a new template. You can see I've got it here called Untitled, and then I basically just fill this in, add image, and then the key points. And then what you want to do is you want to come up to up here, click this little arrow, and you want to set this as your default, set as default. So every time you make a new like page on this table, it will preload your template. So that's a little hack I found. So I'll add in this continuation now. I always add in the emoji as well, just to keep it looking neat, I suppose. So in this case, the maximum adverse excursion was 3.9. That's the furthest the trade ran against us before taking us out. This was on the 12th of January at 6 p.m. So I put Jan 12th, 2022, and I put 6 p.m. It was a continuation, and we were taken out for negative 0.43. I'll write my thoughts. So large impulse from larger ascending within smaller ascending. I do know a pair characteristic on AU is that trends don't, like bullish trends don't tend to continue from ascending channels, and bearish trends don't tend to continue from descending channels. So I hope that makes sense. It's easier to visualize, but I hope that explained that. That's a pair characteristic, so that might be worth noting. Really nice inside bar pullback candle, because it was with the trend. Those are always very nice, and it was a small break, but in my opinion worthwhile because of that pullback candle, and it was on a Wednesday afternoon. There we go. That trade is journaled. So now I tend to delete the stop losses, and then I will hide this, and then I'll name it and put it in a folder like I described before. So we'll continue going now. We're about halfway through the month. So far we're negative 1.43%. Absolutely fine. I've taken two trades and I'm only negative 1.43%. I think that's brilliant. Ideally, you're taking a lot of trades and staying around break even, you know? The more opportunities you can get yourself into while not losing money, the better. That's my philosophy anyway. So we are starting to see a trend here, but there's a shift. This is a continuation pattern here, which I'll draw out. This is a continuation pattern, but the pullback had a shift. So I'm expecting the area below this candle to reject, as there's some buyers there with their stops is probably below this area, but it looks like the buyers got crushed. So price is continuing down. Friday now, so I'm not really looking for any trades after around Friday 3 p.m. unless it's really high probability. I might push it to 5 p.m. but generally that's only for combos. I'll take any combo after 3 p.m. but yeah, before 3 p.m. it's got to be really high probability on a Friday afternoon. So Monday, Tuesday, looks like we're just going to range. That's how it usually goes on a Monday, Tuesday. Sorry, I'm going a bit quick again. Big candle down. That could be a sign that the trend wants to continue, especially coming from this. We know that the market likes to move in impulse, correction, impulse. So we might continue moving down here. Breaking and retracing, more descending. So maybe it's going to be the start of a reversal potentially. So let's see what happens. Okay, that's a nice reversal. I don't think I'd have my order set though, because this did kind of start to go from a descending into a range, so there's liquidity here. I would have not set my order here for a reversal, just because I'd want to see how price would react in this area. And price did continue, so now I'm interested in buys, but if I set my order now, it would show a shift back down. I hope that makes sense. Loads of different angles for my strategy. It's all in my head, I'm afraid. Let's see. Okay, we got a continuation pattern. That is very nice. This has the added confluence of coming from a descending channel as well, rather than coming from an ascending channel, which I described earlier. These don't tend to work out so well on AU. From EJ and EU, they work out really well, but AU, not so well. So it's good. Reversal from a descending, very good. Okay, so price moved a bit further. We got a wick. I don't want to be tagged in on the next candle. And I don't think we would have been, but that's a shift for me now, so I'm not looking for anything after that. It did form a combo, but I mean, after a shift, I think we would have been tagged out. It is good to know these things, so we would have been 1 pip above. Yeah, it would have been tagged out. I think it's during spread hours, but anyway, wouldn't have taken that trade. Big wick, moving up, back down, all over the place, all around. So kind of moving from a larger descending into a larger ascending now, moving back down, more impulsive than descending, so that might be the end of this kind of almost range bound phase. So let's see if this trend can continue. It's a Friday, so people are probably going to be closing off their positions, just ranging. Okay, is this the last week now? Okay, let's see if we can bring it back on the last week of this backtesting. It would suck if we close at negative 1.43%, but at least you know how to backtest. Okay, I went a bit quick there. I clicked one candle too many. On a Monday, would I set my order here? Let me think. Prior price action is okay. It's a bit range bound, to be honest. There's even like a slowdown right here. All it really has is this going for it, which isn't enough for me, especially that tiny break and a Monday, more likely to range. But the second candle did continue. See, put my bias brain on. I actually forgot that it continued. Okay, price is still moving down. Big wick at the bottom. Looks like it's slowing down. Shift in momentum. Breaking the high. Is it going to retrace? Yeah. Monday range, Monday, Tuesday range, the classic. Let's see if it can continue on the Wednesday or Thursday. Alright, so I guess this was kind of ascending right here. News candle for sure took out any liquidity that was above this, maybe? Maybe there's some liquidity left there, who knows. Anyway, the news candle took out all of these, whoever was selling up here, and now we're moving down. Let's see if we can get a trade. Right, this does look good, but for price to come all the way back to my entry, which would be here, that would show a shift. I don't like engulfing candles at all on this pair. I'll take them on EJ, but not on this pair. That's a bit too much. Another continuation pattern, but look at these wicks. It's struggling to move down. There's a slowdown. And then we shifted up, so you would have been screwed if you set your order there. Let's see. This looks pretty good. Maybe we can get a flag set up. There is a bit of a slowdown at the bottom, so I'll be cautious of a shift. It's during the Asian session as well. Okay, yeah, there's a trade here. That's good, right before the end of the month. So, alright, let's see how it goes. So we broke the low, that's good. Not able to reduce risk yet. I don't think so. Cool, right, reduced risk. So you can see with the weak magnet tool, which I showed you guys earlier, it's automatically locking onto this candle. Makes it much easier. So I will hold control and put it 2 pips above. And then I would do my stop loss 5 bars across. Alright, damn, very nice. Okay, I went a bit quick, but this candle broke the low, so I would have locked in my profit right here. So 2 pips above would be 81. Put this down here, 81. There we go, 5.61%. That's great. Now let's put this trade in Notion. So this was a sell this time, 9 pip stop loss. What was the maximum adverse excursion? So we entered on this candle. 386 was our entry. And the furthest it pulled back was 3.4 pips. So if you don't understand already, the reason that is so valuable is because I know now there's not much point having a stop loss higher than 4 pips, you know, and I could have essentially doubled my profit on this trade. And if you have enough data, you can reduce your stop loss like I have. So I found that 7 pip stop loss is most profitable for me, but considering spreads, I've increased it to 9 pips just to make sure that I'm tagged into all of the trades and not tagged out prematurely like against my data. It needs to be accurate with my data because I'm not considering spreads when I'm backtesting. So this trade was on the 28th of January at 3 AM. So Jan 28, 2022 at 3 AM. This was a flag and it made 5.61%. Add the emoji, add the picture. So larger trending market. A bit of a slowdown at the end of the impulse. No shift in momentum in the pullback. In the flag formation. What else can I say about this trade? We weren't able to reduce risk on the entry candle. Was this on a Thursday? It was on early Friday morning. Early Friday morning. That's generally a good time to be in a trade, I think. Wednesday, Thursday, Friday. Thursday being the best. Wednesday and Friday being about the same, I'd say. There we go. I don't think there's much more to say about that trade. Let's see if we get another one before the end of the month. Probably won't, to be honest. So I'd hide that, put it in the January 2022 folder, and lock it. And then that's how you keep your trades organized. So let's see, before the end of the month. Nope, no more trades. So there you go. Thank you guys so much for making it to the end of the video. If you did, react with this emoji so I know you made it to the end. If you want to chat with me, I respond to all comments, and alternatively, I'm offering consultancy calls if you have any questions or you want any advice on your trading. So yeah, there you go. Thank you so much for watching. Like and subscribe, and I'll see you in the next one.